All right, I'd like to welcome everybody to our Corcentric monthly webinar. This time today we are partnering with our friends at Ardent Partners, and we're going to be covering the top trends that will transform your accounts payable department this year and going into next. If you have any questions or questions for this, you'll be able to enter them over on the sidebar and hit send, and we'll be able to get to those questions at the end of this webinar. All right, our presenters today from Ardent Partners, we've got Bob Cohen. Bob comes to us with about 15 years of experience covering anywhere from the accounts payable, business networks, travel and expense. He's been a professional in this area from source to pay for many years, with not only on the competitive side, but also now on the research side. Along with Bob, we have Dan Andrew. Dan Andrew is Corcentric Senior Vice President of Sales. Dan has over 30 years of experience in the area of finance and technologies merge, working with some of the biggest companies to configure innovative payment solutions that can deliver ROI in its first year. So with that being said, Bob, I'm going to turn it over to you, and I'll let you take the rest of the webinar.
Great, thanks, Mike. Pleased to be here. Thanks for having me today. I think we have a lot of information Dan and I have been working on for you, so hopefully you find this valuable and worthwhile. Just a quick overview of the agenda that we have here. So we've introduced Dan and myself. We're going to cover the State of Payables 2018, which is a research report that we produced, and I'll go into a little bit of the background of that. We'll talk about the top trends in AP. What's going on today? What are we seeing out there? What are your peers in companies, small, medium, and large, doing in the industry? And what can you leverage from that? Then we'll talk about the agenda for the modern AP organization, go to strategies for success. What do you do with all this information? How do you go forward? How do you create a plan? And then we'll talk about Q&A. So let's get going here. So with that, part of the introduction, I'm going to bring Dan on to talk a little about Corcentric.
That's great. Thanks, Bob, and thanks, Mike, for kicking this off. It's a pleasure being here with you today. Just to give you a little bit of background from a Corcentric perspective, we're one of the leading providers in the whole procure-to-pay offering. We help companies leverage their offering and increase their efficiencies. We processed well over $38 billion in transaction value last year with a 95% customer retention. We've been doing this since '96, so it's a long time. So we've seen a lot of migration and growth in the space, and have had the opportunity to help many companies achieve those efficiencies that Bob and I will talk about today.
Great. And a little about Ardent Partners. Ardent's a research and advisory firm that focuses on defining and advancing supply management strategies, processes, and technologies that drive business value and accelerate organizational transformation within the enterprise. Ardent Partners was founded 10 years ago by Andrew Bartolini. Ardent actively covers the supply management marketplace and produces research to help business decision makers, one, understand industry best practices, and two, the technology landscape and how to identify best fit solutions for specific budgets and requirements. Part of the Ardent Partners universe includes the payablesplace.com website. The reason I bring this up is it's a fantastic resource of information. We publish at least 3 times weekly on this. We do reviews of solution providers. We have best practice articles on there. We have technology trends. We also do an update on what's gone on over the course of the week. We provide information as far as research we have coming up, webinars such as this. So if you're not familiar with it, I encourage you to check it out. It's a great resource that you can use to help further your career and your knowledge in the space. Part of what Ardent does also, we're a full source to settle coverage firm. What we do also is have a CPO portion of our business. And one of the events that we have coming up is CPO Rising, which is a gathering of 125 to 150 CPOs. It's designed for CPOs by CPOs. So while I know we're talking about AP today, many of you have responsibility for more than just AP. You can cross over into the full P2P realm, as is much more common these days. So I thought it might be of interest to you if you're looking for a great place to learn some knowledge and hear from your peers out there. So let's take a look now at the state of e-payables. So the research report that we have was from a long list of previous reports that we've done here. We follow a rigorous research process we've developed over the years, spent researching supply management market and accounts payable in particular. The report is part of an ongoing dialogue that Ardent has with AP and finance leaders for over a decade. The report examines general competencies and capabilities of AP organizations today and highlights the management strategies and tactics that AP leaders use to get the most from their teams. It also presents a comprehensive industry-wide view into what's happening in the world of accounts payable and captures the experience, performance, perspective, and intentions of almost 200 AP, finance, and treasury executives. The report includes statistics, benchmark analysis, and recommendations that AP teams can use to better their jobs and their organizational approach to this. The primary research effort was informed by the experience and analysis of the report author, myself and Andrew Bartolini, as well as the entire Ardent Partners research team, which has conducted over 200 studies over the past 10 years of this nature focused on AP, procurement, and contingent workforce management. So a little bit about the report itself. This year we had 161 respondents. 47, or about half of them, were at VP or director level. The rest were manager, supervisor level there as well. That's important because we want to make sure that we're getting a good representation of what management thinks, as well as the people actually doing the day-to-day thing. 75%, 3/4 of our respondents come from AP. That's great. You might ask, well, it's an e-payables report. Why isn't that number not 100? Because there's other departments, finance, treasury, IT, that get involved in accounts payable. We want to understand their perception as well, which is why we open it up to a broader market. 58% of the respondents were from large organizations. We classify that as $1 billion and above. So the good news is the report represents small, medium, and large organizations across the board. The majority of our respondents came from North America. However, 1/4 of the respondents did come from mostly EMEA, the European region there. And also, we had over 28 different industries responding to our survey, or people from different industries responding. So it gives us a good cross-section of respondents here. We're not just looking at healthcare or finance or manufacturing. This is what AP is doing across the board, although we are able to boil it down if need be. Let's look for more specific information. So let's move on here. So the current perception of accounts payable. Perception has been one of the biggest issues with AP groups that's been holding it back for years within the organizational hierarchy. For many years, executives failed to see the larger potential of AP, and based on history, as a mainly tactical unit, that's the way it was viewed. However, the long-held perception of AP is finally changing for the better. One hopeful mark of things to come, and in general, the future of AP and how it's going to fit into the modern organization, is the changing tide of perception captured in this year's survey. Our research discovered that in 2018, almost 80% of respondents viewed the AP organization as exceptionally valuable, very valuable, or somewhat valuable. So that's good news. 80% see great value within AP. So while AP momentum continues to build, as we can see on the chart here, there's a lot more work to be done to keep improving perceptions and have AP viewed more favorably within the enterprise. Dan, what's changed? Why do you think AP is being perceived differently today than it was even just 5 years ago? What's going on?
Well, I'll tell you, Bob, I think what's happening is when you see those companies, particularly those that responded as exceptionally valuable and very valuable, they've experienced some of the benefits of converting an accounts payable department as a cost center more into a profit center. So because they've been able to do that, they're seeing that value that's translating from cost into profitable dollars for the organization. And I think it was pretty interesting in your study that, you know, when you look at the demographics, 52% of the respondents were maybe larger companies. Perhaps that lines up. A lot of the large organizations have figured this out, and they're leveraging those skills to convert it into a profit center.
Yep, without a doubt. I think you bring up a good point there, Dan, which is AP is showing its value and it's being received well, and then people are coming back to AP asking for additional information. So in your organization out there, if you're not viewed as highly as you think you should be, or as we know you should be, it's good to start spreading the message out there, telling people what you're doing, because when they realize what you're doing, what your capabilities are, as Dan mentioned, they're going to come back to you and ask for even more information. And that's just going to have this momentum effect there where perception is going to continually increase until AP is going to be an integral part of everything that's done in the organization.
And Bob, just one more comment. I think what a lot of what your organization, Ardent, does is sharing these results. People read about the information. They go to seminars or webinars and they meet these companies that really have experienced the value. And so they know now that it's believable and it's something that can be attained.
Yeah, exactly. I mean, these are real companies and real results. And when we have our conference and when you go to various conferences around, you see people that have automated and have leveraged technology that's available to them. And so it gives other companies, the momentum and the initiative and the opportunity to go back and try to put some of these things in play within their organization. So it's something that we're very passionate about here. And we want Payable, the accounts payable department, to have a seat at that table. And what we're talking about here today is how you can go about elevating AP's presence within the organization, the trends that are occurring, and how to achieve that going forward. So here we are. We asked, what are the top 3 challenges facing your AP organization? And although many of the traditional problems with an AP could be addressed by introducing automation and/or increasing efficiency and productivity across day-to-day operations, a majority of the groups today don't have an optimal mix of resources at their beck and call. 41% of organizations state that a high percentage of invoice exceptions are a top challenge in 2018. Invoice exceptions create a severe bottleneck in the overall AP process by forcing these staffers to hunt down additional information and resolve the issues. Exceptions, while you may not think they're that big, or one little exception doesn't mean that much, they kind of compound every time someone touches something, become much more expensive, and exceptions greatly diminish the team productivity overall and inhibit the staff from being more proactive rather than reactive in chasing down what the real issue is here. Dan, the challenges on the screen that we're seeing here, they're not new. Why do we see the same challenges year after year?
I would really categorize these into a couple of different buckets if I looked at it. When you think about the supplier payments, those are economic opportunities. The rest of them on the screen here are pretty much a function of labor. When you add all that up, because of paper, because of exceptions, because of time, resource, inefficient modeling that they'll process with their operations. So when you look at that, the fact is they haven't been able to take advantage of some of the digitization, even the workflow, the electronic invoicing, connecting their systems. When you're stuck with paper, it's going to create inefficiencies and exceptions. And while we're getting better, I think, as an industry, because companies are recognizing value and they're doing something about it, for those companies that haven't been able to embrace the solutions, it is the same problem. And that's really what the solutions are designed to address.
Yep, good point. It all comes down to doing things manually versus automating the process here. And in and year out, we see these results here with too much paper, approval processes taking too long, being too labor intensive, and along with manual processes becomes exceptions come into play because humans make errors. So I think you're absolutely right there. And until we've automated 100% of the accounts payable department, I think these 3 challenges will probably always still be top of the charts here. So I agree completely there with your analysis. The next question we asked was, how critical is data and intelligence to your finance team? What's interesting here is that over 80% of organizations view the data and intelligence as important or critical to finance. This is an opportunity for AP to improve its standing within the organization. I recently read a quote which said, if you don't know your data, you don't know your organization. And why I bring that up is AP is sitting on a mountain of data. It's had it for years, but It's either been stuck away in a file cabinet, in a desk drawer, on someone's desk. A lot of it hasn't been accessible easily. And what we're seeing is that that understanding of the importance of data has changed dramatically and continues to change. So while AP was just being viewed as a tactile unit that got invoices in the mail, opened them up, paid them, cut a check, and then moved on to the next one, organizations are starting to realize that the data and intelligence within AP is critical to the overall success of the organization. And this is something that we need to leverage as accounts payable professionals for our gain.
Hey, Bob, I've got a great example for you on that, because you're so right. When people say that if you don't know the data, you don't know your business, think about this model. If you could take a purchase order electronically and process it through your business with a receipt and an invoice and the payment, if you did all that electronically, you can now capture the forecasting ability based on payables or your PO. That's one of the hardest areas in a business to forecast because of the buying patterns of your organization. It's easy to forecast expenses and payroll and those type of things, which are pretty standardized. But the procurement side has always been a challenge because of the cyclical nature of that business. But if you can start creating predictive analytics based on that data, which if you don't have it electronically, you're not going to be able to analyze it, there's a tremendous value which really separates a lot of the organizations in the value of learning what to do with that data.
And that leads us directly into the slide we have on the screen here, which is best-in-class organizations versus other organizations. And best-in-class organizations, as Dan mentioned, are leveraging the data for predictive analytics, which we'll talk about in a little while as well. We define best-in-class performance in this report as the 20% of enterprises with the lowest average invoice processing costs and the shortest average invoice process cycle times. Top-performing enterprises have taken their AP operations to the next level by leveraging technology to streamline the AP process to make it more efficient and enable more strategic activities to be carried out. Best-in-class enterprises have demonstrated their ability to drive superior performance across both traditional and contemporary accounts payable metrics. If we look at the slide here, we can see that best-in-class have a 5 times lower cost to process an invoice, a 2.5 times faster time to process that invoice, and a 50% lower invoice exception rate. Huge differences by leveraging technology that can be achieved by you and gained by you. Dan, you kind of talked about it on the last slide, but what here jumps out at you about these results, best-in-class against all others?
I think part of the metrics that you share with those ratios, when a company can be 5 times better than its competitor, when you're talking about accounts payable, something that almost every company has, a horizontal type offering, when you can have that dramatic of a difference, there's obviously a solution that's causing that the results for that company to achieve. When you think about the percentages of linking those invoices to a PO and you see the best-in-class companies compared to everyone else and the other metrics, there's a dramatic difference. So it's not just, okay, maybe this company's a little bit more efficient or their people know their systems a little better. No, when you get a 5x multiple, as Bob described, there's a dramatic difference.
And then that brings a question to mind. So if we look at the time to process a single invoice, best-in-class do it in 3 days, all others are doing it in 10 days. Why? It's only 7 days. Why is that so important? What does that translate to? Why should anyone care about that? Dan? Might have lost Dan there. I'll answer my own question. Is if you can get an invoice approved in 3 days versus 10 days, and your payable terms are 30 days, now you have 27 days with which that invoice, which was a liability, turns into an asset. So you can now, as that best-in-class organization, go back to the supplier and say, we know we're supposed to pay you in 30 days. Would you like to receive your payment earlier at a discounted rate? And that discounted rate equates to a huge return on capital for you and your organization. So that's why it's so important, A, to track these things, and B, to approve invoices as fast as possible.
Those are great.
Liability into an asset. Got you back, Dan?
Yeah, I did. Sorry about that. Lost you for a second.
Yep. So let's continue moving on here and take a look at some of the payments benchmarks that we have here. So, similar to the processing of an invoice, we've consistently shown in our research that the cost to process a payment with a manual paper-based process is inefficient and significantly more expensive than electronic payments. Here we can see that our respondents said the average cost to process a payment is $10. That may not seem like a lot to some organizations, but if you're making 1,000 payments, 10,000 payments a month, and that's not uncommon, hundreds of thousands of payments a month, clients that we've worked with, that means huge cost to the organization when it can be done much less costly for you. What's interesting is that only 59% of invoices are being paid electronically. We in North America love our paper checks. We're holding on to them. Why? I'm not quite so sure. And I think on the personal side, I know myself, I don't pay paper checks anymore, write paper checks out anymore, except for maybe, 5 or 10 a year when I can't do it otherwise. However, in business, we're still seeing 40% of checks being paid with paper. It's a huge discrepancy there, and it's a huge cost to what's going on there. Dan, same question as last time. Let's hope I have you this time. What jumps out at you here?
What jumps out at me, and sorry, I got disconnected for a second. What I find interesting, and there are seminars all the time and conferences talking about kill the check, and there's a lot of hashtags with that focus. The reason today that companies can't be 100% on payments, and what I find companies saying most of the time is they revert back to the ability of the recipient, like the supplier. And they, well, like Bob's comment, we love paper. We have some suppliers that must get a paper check. Okay, so let's just say that's true for today. It won't be for tomorrow, but let's say that could limit your organization and the ability to send out paper. There's no reason why you can't send out all of your electronic. Let a third party service convert some of those behind the scenes over time. Hey, you could electronic.
Yeah, we're still, at least on my end, they're still breaking up quite a bit there on the connection as well. So it's tough to hear that answer there. So let's kind of keep looking at some B2B payment trends here in 2018. And what jumps out at me here in the results, and these were some, it's fascinating when we get the surveys back and we analyze the data. What really jumps out at me here is that only 19% of early payment discounts are captured. That means that 1 out of 5 early payment discounts are captured. There's a huge opportunity there for organizations to generate capital and save capital for the organization there. So it's a huge opportunity, only 19%. This is something that shocked me when I saw the results and still does. Another thing that really jumped out at me here in the results was right next to that is 12% of payments are contested by suppliers. That means that more than 1 in 10 payment made to a supplier has an issue with it that the supplier needs to contact back to the organization that paid them, the buying organization. That is a huge inefficiency, a huge waste of time and money. Not a huge waste of time that the person wants to figure out the problem, but that it wasn't, after the invoice was received, it was approved and was paid, they have to contact you because there's a discrepancy on the payment. So that was something else that surprised me here and something that we can definitely work on going forward. And, we talk about KPIs. Dan mentioned them a little bit earlier on measuring things. And it's something that we measure because we need to understand where we are today and how we can improve. In these instances, if this is your organization, you're looking at, we're only capturing 1 in 5 early payment discounts, we're leaving money on the table for the organization to make an impact for AP to really have be a difference maker. 1 out of 10 payments has an issue with it. That means that we're spending a lot of time duplicating efforts because this has already been approved. So that's why these measurements are important. And that's why we encourage all of you out there to have KPIs, a set of KPIs And you can contact me or Dan, and we can walk through some of the KPIs, the key KPIs that we have that we recommend to you. But it's important to measure for just this reason. There's a huge opportunity to make some significant gains here.
I think, Bob, one other thing too, with that 19% of the early discounts captured, many times those discounts are offered in a rapid number of days, right? So perhaps 10 days. So many companies that are still paper-based, they can't possibly process that invoice in time. By the time they receive it, match it, reconcile it, and pay it, it's too late. You missed it. So it's really a function of their ability to process electronically.
Yep. And when you're looking, if you're manual now and you're looking to justify the purchase of a AP automation solution, Dan brings up a great point here. It may not be something you think about right now, but when you're trying to justify it, but you need to build that into your business case there because it makes perfect sense. You're missing the discount. Why? Because oftentimes you are receiving that invoice for payment after the early discount period has already expired, or even after the fact, after the payment was due, and you're facing a late fee. So great point, Dan. Let's take a look at the best-in-class technology advantage here. So what enables best-in-class companies to be best-in-class? The data shows there's a direct correlation between technology adoption and improved performance. Technology is the linchpin to AP's ultimate success. And the discussion of exactly how this function will fit into the future of the organization. I mean, right now, or right away, it's obvious that the best-in-class organizations are not just relying on a specific set of tools. We can see here that document, imaging, and scanning, best-in-class and all others, pretty close, closely related there. Even with automatic data capture, OCR, once again, very close. So it means that both organizations, best-in-class and others, are leveraging technology, but really, what's the difference here? The difference is that best-in-class organizations are using technology holistically. They're not just solving a point problem. We have too much paper, let's scam it. And that's all they're doing. And that's what's happening in many organizations. Best-in-class organizations take a look at the big picture and see how can we integrate the procurement with the receipt of the invoices, with the payments of what's going on. How do we leverage all the technology that's there? One area that best-in-class has separated themselves from the rest is P2P automation, that full cycle I was talking about. We see here 52% best-in-class organizations have a P2P solution in place versus only 24% for all others. Another one is supplier portals. 61% of best-in-class organizations have a supplier portal available versus only 24%. Why is that important? Why not take that workload off of your internal staff and let your suppliers get answers to the questions themselves? Provide them with a portal where they can log in, submit an invoice, check the status of an invoice, check the status of a payment, ask a query, all without having to pick up a phone and call your accounts payable department or call the business unit to inquire, hey, what's going on here? Why haven't I been paid? When that happens, that's taking you away from your strategic activities. It becomes much more tactical. Supplier portals are a great piece of the puzzle when looking at it holistically. Dan, when we're looking at best-in-class versus all others, some of these are very similar, as I mentioned, and some have a huge discrepancy. When you're out there, when you're talking to prospects, when you're talking to customers, what do you describe as good, better, best? What do you see going on out there?
I think part of what we recognize is that when a client is approaching a solution and they pick something good, as you've described on the left, it gets better with the other tools, ultimately to the best. It's the overall process that you described. Having the complete procure-to-pay solution, that covers all the components. So there are places where e-invoicing and scanning and digitization can fit in with the supplier portal and electronic. But the best companies I've seen are the ones that look at it holistically and figure ways to say, let's make sure we eliminate paper entirely and use all the tools that are available, because it's an overall arching process. And then what happens is they gain buy-in from other departments. It involves more than just AP. It involves procurement. They understand the impact of their suppliers and the accounting, finance, and payment and treasury groups. When they have that holistic view, those are the ones that have been able to achieve the best solutions over to the right.
And I guess a question we usually get during the Q&A section, which let me ask you here, is we talked about a holistic approach, Dan. Where do you start? There's invoice receipt, there's invoice processing, there's invoice payment. If someone asks you, Dan, we need to automate everything, but we can't do the boil the ocean approach, the big bang approach, where do we start? What do you recommend? How do they get started?
I would tell them the first thing to do is try to answer this question. And many companies don't know it. And that is, what does it cost you today to process an invoice? Just start there. Do you know what it costs? Because that will uncover those areas of opportunity, because it'll naturally leak into procurement. It'll leak into finance, where you realize you're missing the discounts, treasury optimization of cash. And then once they are able to understand that, you take a step a little bit further. Okay, what is the entire function of accounts payable cost, and where are those other opportunities? You'll see where those naturally lead into procurement and finance. Now you got a chance to have a blueprint, and you can see, okay, it's more than just my internal cost. I see it impacts other components of the organization. Now you've got an opportunity to make a larger impact, and that's where the companies in the very first slide have been able to recognize there's the opportunity. Those companies that say, okay, let's take those costs overall, now we can shift them to a profit center. That's where you're going to have the greatest magnitude.
Great. Okay, now let's take a look at some of the top trends that are going on in accounts payable here. Technology adoption is confusing, and it's a very crowded landscape. When somebody says nothing ever happens in AP, we don't have any resources available to us in AP, they're not looking at the big picture. When you take a step back and realize all the technology that actually exists within AP, it's very crowded, it's very confusing. On our screen here, we take a look at some of them. Our survey actually had another like 10 different responses that people had. It just got too crowded on the screen here. So, you know, for any modern enterprise function to succeed within its operational core, there's typically a set of static solutions and services that they use for everyday objectives. For accounts payable unit, it may be that many of the current solutions that are in use today solve day-to-day manual and tactical measures, but they also need to provide long-term value to all facets of the greater organization. Now, looking over the results, we still see that a complete P2P solution is not being utilized as much as it should be here. If you take a look, Dan, at the left side of the screen versus the right side, what jumps out at you?
I think some of the terms you used are perfectly describing this here, because if I were to look at the left to the right, I'd say static is more left and dynamic is more right. It's not a coincidence that when you get further to the right and you see the percentages decline, those solutions become very sophisticated. Dynamic discounting, supply chain finance, those are typically adopted after some of the other processes and complete procure-to-pay solutions are put in place, because it's hard to reach that optimization if you're manual. So people naturally start over on the left, but as they migrate to the right, that's where you can really leverage some of the sophisticated abilities with payments and cash management that make a dramatic impact to the organization. So companies, you can start out over on the left, but as you make your way to the right and those dynamic opportunities and solutions in your organization, you're going to see, that's where you're going to see the lever change from a cost center to a profit center.
Yep. And I think if we took a look at our results and look at the best-in-class organizations, the technologies on the right would have a much greater utilization by best-in-class organizations as a percentage than those of all others. So completely agree with you there. And I'm looking forward to, in years forward, that hopefully the portal, the business networks, the dynamic discounting, supply chain finance, all of these adoption rates increase, because that'll be good for accounts payable, because it means they're becoming a little bit more strategic, viewing things holistically. But stay tuned. They've changed dramatically over the past 13 years we've done this survey, and I'm sure in 5 years and 10 years, it'll look completely different once again.
Can you imagine, Bob,
let's take a look at
it like 100% across the board? What impact that would have on all the companies that are able to experience that?
Yeah, I mean, the results would be ginormous. I can make up phenomenal, make up a word there. And the good news is, if that was the case, then we'd have new technology entering the market. that we hadn't even thought of because we solved the big problem there, right, Dan? So that's Nirvana. That's what Nirvana looks like. We've achieved 100% accomplishments, and we can, keep looking to evolve because, as I often say, and I may say later on in the presentation, the AP automation is it's a journey. It's not a destination. So as things continue to get automated, we continue to evolve, we find new things to automate, new ways to improve the process here. So once we get to 100% all of those, Dan, our next step will be to add additional elements in there that AP can influence and take those from a low percentage to a high percentage. So, and that's what makes this exciting, this field exciting here, is because it's a journey, it's not a destination. Once you've eliminated paper invoices from coming into your organization, congratulations. That's the first step into a much longer journey where now, as you mentioned earlier, Dan, it opens up the opportunity for us to pay our invoices sooner and to reap the benefits from that and many other things. So kind of along those lines there. So let's take a look at, we asked our respondents, what technologies they were looking at, what they're planning on looking at going forward. And not surprising, robotic process automation and machine learning was one of our top answers, along with digital payments. At Ardent, we feel that RPA, or robotic process automation, machine learning, and artificial intelligence are going to transform the supply management industry, the way things are done. And we often hear concern from people in AP that RPA, AI, machine learning is going to eliminate their jobs, or they should be concerned about their jobs. And we at Ardent don't think that's the case. Actually, we think that it's going to have a positive effect on the career of a person in AP. And why do I say that? Because we're going to take away those manual, repetitive tasks and allow AP to focus on more strategic initiatives where they can add value to the process, to the organization, how they can increase the bottom line, how can they lower costs, improve profitability. That's what RPA is going to do. Eliminate the manual tasks and allow you to transition that job from a tactical one to a much more strategic one. On the digital payment side, we see that 59% of payments are now being done electronically, as we mentioned before. That's good. It's trending in the right direction. However, to Dan's earlier point, we need to get to 100% there. There's really very limited reasons why we shouldn't be at 100% in this day and age. The technology is there. The cost benefit is there. It's just organizations need to make that leap. They need to go from writing paper checks, printing paper stock, finding an authorized signature, to doing it electronically. The benefits are huge. Dan, talk to me a little bit about what Corcentric is doing in RPA and artificial intelligence. How is it leveraging the technology to help its customers?
Well, what we're seeing is that with the use of RPA and AI, it's making life better. It's not eliminating jobs. It's transforming them and changing them so that they're better. Think about what the iPhone has done and Uber 5 years ago. Your life today is way simpler. It's easier. It's better. You have better technology. Same thing once you take the data and you're able to use artificial intelligence to analyze it, you're going to impact the buying patterns. You're going to have a better efficiency model on what you buy and who you buy from, how you're going to manage that, how you're going to take advantage of the cash discounts, because there's a systematic process that can be learned and gained from the data analysis. So we too don't believe that that RPA and AI is going to eliminate jobs. I think it's going to make life richer and better, and it's going to give us more power, because what we're able to do at Corcentric is we can take that data from the origination of purchase orders all the way through the cycle and help companies make better decisions. And that adds to the profitability. It adds the profitability the way they pay, taking advantage of cash. You're a better organization as a result of using all those tools and technologies.
Yep, without a doubt. It's going to enable you to, we always hear about doing more with less. RPA, AI is going to help you do more with less. So as your organizations grow, you don't need to add additional resources to process invoices because you've already got that gain available to you. So don't be afraid of it. See how you can leverage it for mutual benefit for yours and your organizations. The other two top scoring responses were not surprisingly related to data, agile reporting dashboards and predictive analytics. Dan talked a little about predictive analytics earlier on. He kind of stole my thunder. So I'll concentrate a little bit more on the agile reporting dashboards there. There's no doubt that dashboards can help drive value from AP data. We talked about this before. If you don't know your data, you don't know your organization. The ability to centralize, analyze, and share the data that's in AP can allow it to deliver operational and financial insights more quickly and lead to stakeholders receiving better, more accurate intelligence more quickly, and ultimately being able to make better decisions. This is important because it can help AP take a more active role in the enterprise and even start participating in working capital and cash management planning and strategy implementation. I was on a call earlier today with just this scenario where AP was approving its invoices sooner and then was talking with Treasury directly, and AP and Treasury were talking about how they could take advantage of this invoice that was approved early and what to do as far as offering discounts to their supplier and the return on capital that would help the organization achieve. Not something 5 years ago, 10 years ago, Dan and I were having these discussions about improving working capital management with organizations. That didn't happen. Now with today's technology, those conversations are happening. AP is talking to the treasurers. It's talking to the controllers. It's talking to the CFOs about how it can have an impact on cash flow within the organization. So it's elevating itself. And these are great examples of how it's moving from a tactical function to a much more strategic one. So let's kind of move on here and take a look at what the future holds here. We asked our respondents what the future looked like, and we asked them to take a guess 2 years and 5 years out. The discussion on where AP can go in the months and years ahead is very deep and complex. The AP function has many avenues which to not only enhance its own operations, but become a true partner in the digitized enterprise of the future. Both strategy-led and innovation-led approaches are paving the way for AP's future to look much different than it does today. Let's take a look at some of the expectations. Oh, there's a build here. For 2 years out. So what are we taking outlook here? So 71% of businesses expect to experience active collaboration and partnership between AP and functions like procurement and treasury within the next 2 years. They see them having an innovation-ready culture. 53% of businesses expect to be part of this innovation-ready culture that embraces new technologies and systems, not the old AP, which avoided new technology or wasn't actually offered new technology. They just said, you don't need it, you're AP, just pay those invoices. Now the view of AP is changing and they realize technology applied to accounts payable can reap huge dividends for the organization. Digital payments is another area that's playing an invaluable role as far as cash management with the organization. 50% of the organizations surveyed in this report plan to adopt these technologies over the next 2 years. And this is a huge opportunity for organizations, as we've discussed, to lower costs, improve cash flow, and eliminate manual, error-prone type processes. And then finally, the intelligence hub at 44%. So the great news here is that our AP brethren are starting to think of AP as sitting on this data and how they can provide the information out to the rest of the organization. So they're an intelligence hub. You're an intelligence hub sitting on this data. So extremely important, and perceptions are changing because if we asked this question 5 years ago, the responses would have been entirely different. Dan, you're out there every day. Is this what you're talking to your clients about when you're going in saying, hey, let's automate accounts payable? And you say, great, let's eliminate the paper, let's eliminate the process. What are the conversations you're having? Are they in line with what we're seeing here?
I think they are, and that's one of the reasons we love working with Ardent Partners, because this is just a wonderful slide. Because if you look at this, I think some of the key words that Bob shared today, when you want to bridge the gap between those dialogues of perhaps accounts payable and treasury, words like working capital, which people weren't mentioning 5 years ago, today there's a bridge between those departments, because of those opportunities. And part of the key word for this whole thing is collaboration. So when you take the technologies and you bring them together, and you can see how accounts payable can actually help and contribute to treasury, which previously they perhaps might not have been looked that way. Today, it's a strategic weapon. Accounts payable can drive that behavior and to help the goals of treasury and finance, depending upon the working capital goals, to help the organization. In the past, that was ignored. So now when you look 2 years out, those companies that are already there at the intelligence hub component, where they've gathered the data, they've managed working capital, they bring those departments together. Once again, that collaboration, those technology solutions are what sets them apart.
So then the next question we asked, 5 years. Now I know 5 years can be difficult to predict out, whether it's, for your own personal career or the future of your department, but you need to have a plan, because as the saying goes, if you don't know where you're going, any road will get you there. So you need to have some objectives, short-term and long-term. So the 5-year objectives that our respondent said was 44% expect to have an improved enterprise experience in regards to how AP works. So what does that mean? It's taking a bigger picture. They expect to have AP be more a part of the conversations about the organizational future and not a back office function that's overlooked. 31% expect to have some kind of cryptocurrency-led platform to help them improve financial experience. Not surprising, cryptocurrency is certainly something that we're monitoring closely. It's on the precipice of, I think, becoming much more widespread use. Right now, there's a few people dabbling in it, but it doesn't have widespread penetration. But I think over the coming years, the technology will receive an uptick. So it's good that people are looking to that as well. And then 28% have that intelligence hub again. So more validation that people are starting to think in the right fashion. 44% within 2 years, another 28% within 5 years. So people are realizing the importance that AP can play within the organization here. So let's take a look at some strategies for success before we get to the Q&A section here. We asked our respondents, what's necessary for AP to succeed? Not surprisingly and encouragingly, they said smarter systems that drive more efficiencies. So that's good news. People are not thinking we're going to throw more bodies at a problem and we're going to solve it. They realize technology and automation is the way to go, and that's how they're going to help elevate their game. They need to understand, 56%, we need to understand better what's going on in the organization. We need to analyze their data better. We need better analytics. We need better reporting. That's great news as well. In the middle here, there's still a lot of organizations out there, even in our survey. We don't survey ones that have automated. We just go out to a wide range of tens of thousands of organizations and ask them, what they're doing. And so some are automated and some haven't. So 40% said they need to eradicate manual tasks. That's not surprising. Our data kind of showed that before as well. Dan, you agree what we're seeing here on the screen, what our respondents saying? Are you seeing the same thing? Or do you see something different going on out there?
I think one of the biggest differences on this screen is that companies have responded by saying smarter systems, and it's plural. In the past, that may not have been the case. What they're telling us here is that they recognize the need for the interdependency and collaboration between IT, between procurement, between your ERP systems, between your electronic invoicing, between your supplier portal and your payment solution. Those are smarter systems. So they're recognizing that it didn't just say, well, we need to be electronic for a paper invoice. No, it's smarter systems, because that's really what drives the efficiencies. And again, as you migrate to the right and you see the enhanced collaboration, that's the way they take advantage of those systems, because once they're smarter, they're collaborative and they're more effective for the overall departments.
Great point. Last slide before we get to your questions, and if you haven't asked a question yet, please do. That's our favorite part of the webinar, is answering your questions directly. So let's take a look. We talked about trends going on. What are some strategies for achieving a successful AP transformation? And transformation can be from manual, it can be from partially automated, it can be from automated, because as always, as I said, success in AP automation is a journey, it's not a destination. So first and foremost, take a look at your current AP operations. What's going on? What are you doing well? Have some measurements in place so you can understand what you're doing. Are you doing a good job? Have you improved? Have things gotten worse? Is the workload bigger? Take an understanding of what's going on right now. Don't be afraid to invest in technology to automate the core processes. We've shown here that taking a holistic approach to AP automation has huge dividends. The best-in-class organizations see significant financial and process improvements from doing this, and this enables you to achieve much bigger things within the organization, working capital management improvements, reducing costs overall. So take a look at how you can leverage technology to automate the core processes. Develop a short-term and long-term roadmap for aligning AP with the goals of the greater enterprise. So don't just set goals for AP within a vacuum. Take a look at the bigger organization. How can you fit in the short term? How can you provide information that the organization needs? Not just AP needs, but what does Treasury need? What do the business units need? What does finance need? And how you can play a part in that and develop a roadmap, because like I said, if you don't know where you're going, any road's going to get you there. Here you'll have a plan. You can work towards that, and that will pay huge dividends for you. Dan talked about it. I've spoken about it. Collaborate with other parts of the business. Talk to procurement. They're part of the supply chain just as AP is. Understand what they're doing. Go to lunch with them. Have meetings with them. Understand their processes. Understand how they sign up suppliers, how they negotiate terms, what's important from a payment process. The more you know about procurement, the better you can internalize that within AP and provide a better service back to them as part of the financial supply chain there. Talk to Treasury. It's about money. AP dishes out money. It's the part of the organization that sends out money. If you can figure out how to manage that money better and talk with Treasury, as we've mentioned a couple different tactics here. If you have an invoice approved sooner, go to Treasury and say, what do we do with this? We have 27 days. Let's figure out how we can maximize return on this asset before it expires and we have to pay it at full term. So take a look at that. Talk to the business units. I know from my years in the space, business units are the key to kind of getting more money for investment. If the business units are happy for providing them with the information, it's critical to the overall success of AP and the perception of AP. So work with those business units. You're going to find out they probably, want suppliers to stop calling them about the status of an invoice. They want to have better data on their spend. You can provide all that information. If you just ask them, you probably have it available to you today. So go out and talk to them. Dan mentioned KPIs. Establish metrics, what you're doing today. How much does it cost to process an invoice? How long does it take to process? How long does it take to process an invoice? What does the payment cost? We have some in this presentation here. There's others that Dan and I can provide you here. Start measuring so you know where you are today, and you can see where you're going tomorrow and how well you're tracking against that KPI, if you're improving, if you've dedicated resources and technology to lowering the cost, to speeding things up, you're able to track that. As with anything, any project, understand the importance of change management in determining the success or failure of that project. You need to realize that just because you're doing something in AP, the rest of the organization that's affected by it, if they're not properly coached and trained and educated onto why you're doing this, can sabotage the overall success of your project or any project. So make sure that anybody impacted by any changes you're making that we advocated earlier on here are informed, and you educate them and let them know why they're doing it and what the benefit is to them, because that will help the overall success of that project in particular. And then finally, become a better communicator of AP's contributions and achievements. And what do I mean by that? AP has always been kind of quiet. It doesn't go to the rest of the organization and say, here's the value we're adding. And the reason for that is a lot of it, what they've done traditionally was tactical. But as we move into a more strategic role for AP, we can talk about how we're improving working capital management, how we're making supplier satisfaction going up, because we're enabling suppliers to be paid earlier. AP automation is enabling those suppliers not to have to call in as much. So there's a huge impact. Start talking to the rest of the organization about all the tremendous things that AP is doing. Become your own champion. And once you start saying things about it, people will start hearing AP is doing all this great job, and the perception that we talked about earlier, which is so critical, will slowly change within your organization. They may think of AP as only paying bills. When you start talking about the huge impact it's having to working capital management, they're going to view AP in a different vein. So become AP's biggest proponent. I know it's a lot of recommendations to take a look at, but look through the list. I'm sure you're doing some of them now, but it's good to have a big picture of what's going on and how AP can move from that back office function to having a seat at the table where decisions are made. So with that, I want to bring Dan back on and open it up for the questions that you've asked during the presentation. Mike, are you with us?
Yeah, I'm here. Great presentation, guys. And just to let everyone know, so this question can be answered right away. Yes, we will be sending out a copy of this presentation, hopefully before the end of the day today, along with a recording of it. That being said, on the right-hand side, please enter any questions and we can get to them. And let me just check here real quick, guys. I know we're running up on time. Looks like we do have a couple one here. We have a question from Kirsten. She's wondering, why is it so important for our suppliers to submit invoices electronically?
I can share a couple of comments for you on that for Kirsten. Essentially, if you're able to let the suppliers submit the invoices, what you're doing is you're allowing them to not only verify the information up front, to take the opportunity to make sure that the data is correct. You're shifting the labor to the suppliers instead of dealing with paper in your four walls, and you're providing visibility to the suppliers. So like Bob mentioned early on, there's great value in the supplier portal for all the data that the supplier gets to see, the visibility, the transactions, the acknowledgments, the verification, the remittance data. Those are all of great value. So if you can equip your suppliers with that, they're going to share back with you data, which can be integrated and automated through your process.
Very good. We got a few more questions in here. I know we're running up on time. We probably only have time for one more. Any other questions that are submitted, we will definitely get back to you right away. We'll email the answers to you. But the one final question here got from Benson. He says, look into your crystal ball. What trends and technologies do you see impacting AP in the future?
I'll take a stab at that first, and then Dan, you can chime in after that. We kind of covered some of those, Mike, during the presentation there, as far as, what do we see impacting AP going forward. Certainly robotic process automation, RPA, artificial intelligence, digital payments, digital currencies are going to be impacting what we do here in AP going forward. It'll open up, big opportunities for us. And also, we talked about better reporting and analytics, and I don't think that's really looking too far forward into the future, because the analytics that Corcentric has that they can use to leverage or to analyze the data that's in AP is quite advanced today, but it's getting better all the time. And I think so advanced analytics are certainly one of them, predictive analytics, which Dan talked about, and how you can interrogate the data once you have an electronic format. So I think those are some of the technologies we talked about. Those are the ones that are kind of, some of them are here today, some of them are getting much more integrated in the process, whether it's the analytics or whether it's the RPA and AI. I think we're scratching the surface of what can be done going forward with that. And digital currency is probably one that will impact the AP space in the not too distant future. We're kind of on the precipice of that. Dan, anything to add there?
Yeah, I'll add one last thing because Bob covered it. I think my crystal ball says eventually you're going to see checks in a museum, and kids are going to say, what was that? You used to pay with that? Because those are going to be gone.
Okay, good point.
All right, guys, I think that's all we got time for right now. So in closing, I'd like to thank everybody. I'd like to thank Dan and Bob for taking part in today's presentation with Corcentric and Ardent Partners. Thank you all very much. And if there's any other questions, we will be sure to get back to you right away. Thank you and have a great day.